What's going on, guys? Bexio back, and today we had a brand new video on the inflation data, Jerome Powell, money printer, and the inflation effects, everything happening right now, and a lot of things, going a little crazy. Inflation at record levels for the past 4 decades. It's at a 4 decade high right now, which is crazy enough by itself. But before we get into that, if you're not subscribed, make sure to smash that sub button because we're on the road to 1,000 subscribers. But we can look at the CPI report right here and see that we are at 7% inflation for the year over year, December to December. Massive moves. This inflation is a 40-year high. It's ridiculous numbers coming out. We had 0.5% raise in month over month, which was actually lower than last month, I think, by a little bit, not by a ton, but by a bit. So we'll see what happens with that. It's still kind of ridiculous, and the 7% figure, extremely ridiculous. But we can look at these kinds of charts here, seeing is Lynn Alden. She talked about the inflation rates before it came out, saying that it has a decent shot at being 7% plus for year over year. And she was spot on right. It was 7% on the dot, and talks about inflation going or peaking in Q1 of this year. So she could be right, but the only reason is because we've seen so much inflation that it would have to inflate so much further to just keep up the same rate. So maybe we start to see a little peak and a move down in inflation. Who really knows? But you can see this chart looking at the blue line being the inflation rate itself, the CPI, the red line being the federal funds rate, so like the interest rates, the Fed interest rate, and the 3-month Treasury bond. You see all of the federal funds rate and the 3-month bond collapsing, going to zero. They're at 0% right now. Inflation skyrocketing. If you go on to, this is a good chart to compare this right here. You see the last time inflation was 7%. The federal funds rate was 11.5%. The interest rates were 11.5%. So there's no shot that they can go back to 11.5% to try and combat this inflation or go back to how that was. But it's just, inflation absolutely crazy. Right here is where we are, 7%. You go back to, it's like in the 1980s, 1982 or 81, somewhere around there. And the interest rate, 11.5%. Absolutely ridiculous stuff. I mean, we will never see an interest rate 11.5% again. And this is the biggest problem right now with the interest rates and the inflation. So when you can look at them, and the correlation between the two is that when you have so much debt like we have right now, massive amounts of debt, you can't just increase the interest rate to 11.5% and do all of that because you can't afford the debt. They really can't increase the interest rates too much more at this point because of the debt and making the debt unsustainable. And that's a whole nother problem that they have to deal with. So it's getting to a weird situation where we might have massive inflation just because the debt is so big that you can't combat inflation through interest rates like they used to do. So I don't know what their solution is going to be, but I don't think they can raise interest rates basically to anything higher than this for a prolonged period of time, for like multiple years at a time. Maybe for 1 year or a few months, or like 6 months, 8 months or something. But eventually they're going to have to bring them back down because they're not going to be able to supply the debt that we already have. I'm just looking at some things that obviously reacted to this interest rate news, the CPI data. This is Bitcoin. Had a nice pump up, a big move up on the CPI news. Was looking good today, dumped and lost everything that it put up. So, we'll just see what happens with that volatility. You see the overall market here just very red after today. It was very green yesterday. It looked great yesterday. Now, not so much for whatever reason that is. We're in one of those choppy markets right now. It's really unpredictable. No one really knows what the Fed's going to do because the Fed has said things that they're going to do and then just not done them. So you can't really predict what's going on in the market. That's a big problem. Uncertainty is the biggest fear for any market because markets like to price into the future. Even if we look at like a VTI, this overall index, even yesterday for VTI was a red day. The CPI data, it was not great for them. So even the overall stock market had a red day and then a massive dump right now today. And, it's just going crazy. Individual stocks did all right yesterday. And this seems like the indexes, so it seems like overall stocks didn't do very well. And it's just probably the fears of the interest rate hikes. Those are something that's major right now. People see big inflation and they project that interest rate hikes have to be coming because that's how the Fed has constantly talked about being their tool to combat inflation. So that's probably what we could be seeing in all of these markets is the pricing in interest rate hikes, and even Bitcoin's susceptible to that. Interest rate hikes would mean the strength of the dollar would go up. Usually Bitcoin and the strength of the dollar are an inverse correlation. So if the strength of the dollar goes up, the price of Bitcoin goes down. And if the strength of the dollar goes down, the price of Bitcoin goes up. But then this is something that I think is super important because we all know CPI is designed to be, kept down, made sure that it doesn't get too ridiculous. They've continuously taken things out of CPI that make it go higher to keep it artificially lower. So if we look at like these kinds of charts, we can even see if you go from the 1990s based model for inflation, that this is where we're at 7% now. The 1990s model is over 10%. And if you go off of the 1980s based model, which we see the same thing, 7% for CPI right now. And then this model is actually at 15%, almost on the dot. 15% inflation. If that was the real number and we saw 15% inflation on the CPI data, there would be so many people freaking out. That is dangerously close to hyperinflation, which is 21%. So this inflation is not a joke. It's not something that's, not going to be a problem and just it's actually good for you. It's terrible for you. And it's way worse than what the CPI says. The CPI is designed to stay low. It doesn't really count certain things. And then these other models that we see in the 1980s model is 15%, the 1990s model at like 11%, 12%. So we're probably in double digit inflation in reality. And the CPI just doesn't count things that it doesn't want to count because it'll push the inflation up. So absolutely crazy that the inflation that's going on, and it's something that the Fed might not even be able to really do anything for. So obviously this inflation CPI data release had a lot of people talking about what the Fed's got to do. And you see like these numbers, the 7%, which is ridiculous, will fuel expectation that the central bank could raise interest rates earlier and faster than initially expected. That's the battle we're battling right now in stocks and crypto, is everything that was kind of priced in saying they'll raise rates, at this time. Now we're seeing these numbers. We're seeing Jerome Powell start to freak out and kind of say more hawkish things. And we're seeing them be way more assertive on their inflation and interest rate hikes and all this stuff. So where the market was pricing in future and like taking a guess where they think things might happen, now it seems like they might have priced in way too far, and now it's pricing in for a sooner interest rate hike. So markets always look to the future of what's going on. We see right now what's probably being priced in is what's like a guess of what people or what colleagues, Jerome Powell's colleagues, have suggested a March increase on the table. So probably pricing in a March increase. And this right here kind of talks about the rent being a big factor in CPI, and that rent lags like 12 to 18 months. So saying rent also makes a huge portion of the CPI, and private sector data shows that rent costs have begun to rise more than is currently reflected in CPI numbers. So we could see CPI still go up regardless of what they're trying to say, because the rent prices are just starting to go up more now. So that makes up a pretty good portion of the CPI. If rent just started going up, and we see that it can be a 12 to 18 month lag, so it could be a whole nother year of bad inflation readings and CPI data, which would scare the market into thinking these interest rate hikes are coming, and massive hikes and massive tapering. Those are fears are going to come back in, and we're going to see it reflected in prices, obviously. So inflation at a 40-year high, 7%, ridiculous numbers, and they can't even really combat it through interest rates for a prolonged period of time because of the debt. And I mean, last time we were at 7%, we were at 11.5% interest rates. 11.5%, I've never seen 11.5% interest rates, so there's no way we go back to that. So their toolbox might be shrinking a little bit in what they can actually do. But that's gonna do it for this video. As always, don't forget to smash that like button and subscribe. We're on the road to 1,000 subscribers. Here's my next video.